Hi, I'm Contreras, a registered investment advisor. And in this video, I'm going to talk about how business owners can get huge tax deductions using business retirement plans. So let's get started. So some businesses may have retirement plans. So this video will be a review for them. And other businesses may not have any retirement plans. And so this video, they're going to get some good information regarding the two different types of retirement plans that exist out there. So let's go through the first one. The first one is what's called defined contribution plans. Contribution plans. Okay. All right. Boom. So these types of plans, some examples of these you may be aware of, especially probably the most popular one is like a 401k. Also, there's profit sharing plans, other plans like a 457 or a 403b, an employee stock option plan. My mind was going blank, and other types of plans like these. The reason they're called defined contribution plans is because the contribution amount is known of what's going in there for each of the employees. And in the future, who knows what their investments are going to be like, because each employee is going to have to manage those plans by themselves. So we just know what's going in. The benefit in the future is going to be dependent per employee. Now, these plans, currently, as of 2026, the limit for these plans in terms of contributions is at $72,000. So, 72,000, that's 2026 numbers, and that's per employee. Now, usually that maximum is not reached by all employees, because part of that amount is the employee contribution per their payroll, which they do themselves, and that maximum is about $24,500 in 2026. So that would be that the rest of that would be coming in by the employer, or the employer contribution, in terms of any matching contributions, which generally are done in a 401k or 403b or 457 sometimes, and also any other additional employer contribution like a profit sharing and things like that. Usually the business owners themselves, or other key employees like upper management and executives, are the ones that are maxed out for these plans, and everybody else, just puts in their amount, and the employer puts in a minimum for them that they require, that the IRS, requires for them to give to them in order for certain employees to be maxed out in order to reach this limit. Now, this limit does not take into account any catch-up contributions in case any employees are 50 years or over, because that would be, I believe, another $8,000 on top of that, which would make it $80,000. And then on top of that, if any employees are 60 to 63, I think they could put in an additional like $11,000 last time I checked. Not 100% on that one, so I'm going to have to double check on that one. But yeah, so quite a bit of money could go into these plans. Now, in terms of a deduction amount, the maximum that the employer can deduct is called, or the amount is 25% of eligible payroll. So of all the employees that are eligible for these plans, all that combined, that eligible payroll, 25% of that can be deducted by the employer. So that would mean that the employer would contribute that amount on their behalf in order to get that deduction. So the employee contributions out of their own check does not count. It has to be employer contributions. So that generally is a huge amount of money. So for example, if the eligible payroll is $400,000 for all your employees, and the employer contribution for that year is $100,000, so then you would max out the amount that you could deduct for your business, because that would reach, that's 25% of the eligible payroll. So that's how these work. And of course, if your payroll is even higher than that, like let's say it's $1 million of eligible payroll, and you put in, the employer, the business puts in 25% of that amount, which is 250,000, then you're going to get a 250,000 of deductions. So as you can see, quite a bit of deductions could go into these plans. So that's the first. These are the first type of plans, called defined contribution plans. So the second type of plans are what's called defined benefit plans. Benefits plans. Now for these plans, you may be familiar with these plans because a lot of businesses back in the day used to offer basically just these plans, no defined contribution plans. They just offer these plans. They were called pensions. Well, they're still called pensions. There was a traditional defined benefit pension. And there's also other types of plans, but that was the old school one. And so in these plans, each employee that participates, they know what their benefit is going to be in the future. So, and most of these plans, the employer is the one contributing to these plans, not the employee. In some of the plans, you can allow the employees to contribute and put some money into it, but most of it is going to be from the employer. Most of the money is going to come from the employer. And so each year it may vary depending on the employees and also the payout option. But the gist of it is that the employees, when they get their statement, they're going to know what they're going to get in the future, right? Oh, if I continue to work for my employee and I earn this income, then if I work for 30 years, I'm going to get, like, I don't know, 50% of my last check, something like that. So the benefit is defined in the future. That's how these plans work. And so with these plans, like I mentioned, there's a traditional defined benefit pension plan. There's other plans like a cash balance plan, a money purchase plan. But the thing with these plans is that huge amounts of contributions can be made into these plans. So, hundreds of thousands of dollars or even hundreds of thousands or even millions of dollars can be put into these plans. Just huge amounts. And the good thing with these plans is that, especially if you're a business and a business owner, that you're older or you have and you haven't done any retirement savings, these plans could allow you to quickly amass a huge amount of benefits in a short amount of time. 5 to 10 years. You put in $500,000 into these plans. That's a lot of money going into these plans. And so, and as well as, if you have high, key employees as well, you can put quite a bit of money for them as well too. So because you have a higher amounts of contributions, these plans have the possibility for higher amounts of deductions as well, up to the IRS limits, but sometimes it could be all the contributions into these plans could be deducted as long as you meet the IRS limits. So these, and one last thing regarding these two types of retirement plans is that you don't have to do one or the other. As a business, you could do both of these. You could have like a 401k and with the profit sharing to max out these for certain key employees plus everybody else that participates. And you could also have a defined benefit plan on top of that, some other pension together. So it all depends if you're able to do it. So when you combine both of these, as you can see, you could have hundreds of thousands, if not millions of dollars of potential contributions and potential deductions going into these plans that not only benefit you tax-wise, but for the business, but also for the business owner and the employees. They're also going to have retirement benefits for their future. So I hope you found this video helpful and informative. if you like the video, please like and subscribe to my channel. That would really greatly help me out a lot. Getting tongue-tied here. Sorry about that. But yeah, if you'd like more information about these plans or see if maybe do a consultation, let me know. Contact me. Thank you again for watching. If you're still watching it until the end, you're one of my favorite people. So thank you. And until the next video, wish you guys all the best and make informed decisions.